Good morning. Well, the line market tamer is back. Wall Street has clawed back half of its prior day's losses on stronger than expected economic news. There was a sharp and stronger than expected recovery in home sales and a huge surge in manufacturing in Texas, swinging from a negative read of 49.2 to just -6, meaning although manufacturing is still recovering, industrial activity is indeed rebounding. The S&P 500 finished up 1.5%, the Dow up 2.3%, the Nasdaq 1.2. The big standout was Boeing rising 14%. After certification flights began for the troubled Boeing 737 MAXs. Now, Facebook shares closed 2% higher despite Starbucks and Coca-Cola announcing that they're going to halt social media advertising. And after the close of trade, we also had big news from the banks. Bank of America, Citi and Goldman announced that they'll keep their quarterly dividends the same following the Fed's new stress test, while Wells Fargo will have to cut its dividend. On the commodity side, oil guzzled up 3% to $39.69 on improving economic conditions. Oil has held its 8-year high, which it scaled to the last week. It's now $1,784. Copper rose 1% and the iron ore price last traded higher. Now, what to watch today? Well, the Aussie futures are suggesting a 1.2% lift, which means the market will be up in the order of around 30% from its bear market bottom. Keep in mind it is the end of financial year today, so there could be a lot of volatility. On the economic side of things, private sector credit data is out today. On the company news side, the KFC and Taco Bell franchisee Colins Foods, CKF, they report full-year numbers today, and there's a lot of ex-dividends today, including tech ETFs, TECH, FANG, ROBO and the biotech ETF CURE. Now to three local trading ideas. Well, UBS has rated Brickworks, BKW as a buyer, initiating coverage of the Brickmaker, expecting its shares to grow to $17.10. Now, given BKW's earnings are recovering as brick production intensifies, of course, in the US to meet rising demand in industrial and residential real estate. Secondly, Citi has reiterated Coca-Cola CCL as a buy, expecting 15% share price growth as drink consumption begins to really fizz up. And after Fisher & Paykel FPH reported a 30% rise in net profit after tax, its highest growth rate in at least a decade, and provided stronger than expected profit guidance for this financial year, 2% above what the market expected, particularly given COVID-19 related demand is continuing to come through. Citi, however, and surprisingly, reiterated the stock as a sell, despite saying Fisher & Paykel's management is excellent and earnings are expected to rise. However, what is worthwhile to note, Fisher & Paykel trades at a 25 times earnings ratio, probably why Citi thinks it's too expensive and is a sell. I'm Jessica Amir with Bell Direct. Happy trading. Have a great day.